Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello, and welcome out to another Insights. We are going to go over the big guys for the next week or so, and thought this was appropriate for not only today, it just hit me just right though too. The quote is, I never make the same mistake twice. I make it 5 or 6 times, just to be sure. And as I told you last week, I have always been challenged with scheduling, and time management is one of those challenges for me. And so it has, especially shifting things around the way I explained them last week, it has been things are always a challenge. It's just a question of what we each have to work on. Some people, time management is no problem for, something they learned at an early age, and it's not a challenge. For me, it is. So I try to put things in my calendar and stick to a plan, and it doesn't always go as planned. It's much like trading, right? I mean, you can set up a plan all day long, and you can try to stick to it, but there are things outside of your control that you can't do anything about. So not necessarily the case here, but it's just a matter of me getting being able to stay on track and not get distracted by other things that happen. So anyway, I apologize for being a day late. Hopefully I'll get on track here and get in a nice little routine soon. So by next week, let's put it that way. Excuse me. And this cough is still lingering. I keep thinking it's almost gone, and it seems like it's gone, and then I'll go a whole day without coughing, and then 8 o'clock at night I start coughing right before bed, or 10 o'clock right before I go to bed. Just start coughing, hacking up a lung. That's fine the next day. It's just weird. So anyway, with that being said, let's get to it. And we will go through just briefly the overall markets real quick. And you can see the SPX dropped off, broke below that 1867 level. And last time, about 3-4 weeks ago when we did it, we rallied back big time, was down about 500, hit this 1815 area, and rallied back big time, got back above that 1867, and here yesterday we just challenged it. Not only challenged it, broke through it. And it looked like we were down about 50 again as well. And then it rallied back up. It was only down about 15 or 20 for a bit, but then by the time it closed, it was down 26. So, and we have closed at a new low. We have broken pretty definitively that 1867 area. We have decent volume. The long shadow is somewhat bullish. I mean, it adds a little bit of bullishness to it. If it was just a solid candle, and if it was just an all down day like yesterday, or the day before, I should say, like Monday, or a Friday, I guess it was. Yeah, that was Friday. If it was a big candle like Friday's, it'd be much more bearish. But right now, there's a little bit of bullishness
Attention,
to it that definitely
an alert
makes it,
target has been reached.
Worrisome, I should say. Moving on to the NASDAQ. A little hammer pattern there. It obviously, this gapped a lot more. So the SPX and the Dow don't gap as much. So it'll show an open that's close to the day before and then drop. Where the NASDAQ, being technology stuff, I don't know if that's really the reason or other stuff. But NASDAQ seems to gap more, so you get these types of patterns a little bit more often. So there's the Dow. You can see it's very similar. Interesting. I didn't notice this, that the Dow did not break a new low. I did not notice that yesterday. It's not really even close to it. Just challenged a new low. So, but then again, I mean, it's the Dow. It's 30 stocks. So is it really that indicative? And these are a lot of the bigger, higher flyers that aren't affected by the economy as much as some others. They can be, but if you're a conglomerate, a big company, you have some pretty massive diversification. If one company's not doing well, it doesn't have a massive effect on your overall performance. So, and then you've got, I mean, Microsoft, and I don't know if Amazon's part of the Dow yet or not. If it's not, I'm sure it will be soon. I don't know. I don't pay attention. In fact, now I'm curious though. Let's go have a little fun. Dow 30. Dow 30. Amazon is not. That is surprising. Well, it's not surprising, but I'm sure it will be soon because, I mean, Walmart was the biggest retailer. But you got Apple, American Express, I mean, Cisco. It used to be industrials. Chevron, DuPont, Disney. It's not industrial. It's an entertainment company. GE is the only one that's original. You got Goldman, finance companies, Home Depot, retailers, IBM, a computer company. Same thing with Intel, J&J. So while this is it's a lot broader than it used to be, it's still, you're talking only 30 companies. I mean, they may be 30 of the biggest companies, and at least it is a fairly broad spectrum where you have some technology, you have retail, you have oil, you have, do we have any transports in there? Not really. I mean, Caterpillar, Boeing, those are all industrials anyway, DuPont. But it's a lot broader spectrum than it used to be. Let's put it that way.
Attention, an alert target has been reached.
So, oops, back to, there we go. And going at the transports, you can see transports has not dropped off like before, but they've been so beat up anyway. It's not a huge surprise to not see them down as much. Russell's similar. Actually, I take that back. Russell has cracked even more, which being the small caps, and this is probably what we'll see with transports as well. You can see the pattern's very similar. Just the transport's been holding out a little bit longer, but the Russell has broken down in a big way. You notice that nice little trend that's been going on here, and it cracked it Friday. Big Maribozu, big down day, and then yesterday, also big down day. Excuse me. So, small caps. If small business isn't doing well, then generally speaking, the rest of the economy is not doing well either. So the VIX, no surprise, is up a bunch. And you notice that it's been elevated for the last month or so, which can bring us challenges. Playing the downside, you've got to time it better so that you can get some puts with the volatility not too inflated. So we've got to be conscious and aware of that. So keep an ear out for that. Excuse me. So let's go through the big guys real quick. And then what I want to do, because it is the middle of the day on Tuesday. I was hoping to get this done this morning. But the market is live. So we'll go look at these right here. And I'll show you a little bit about, so you get a little extra piece. And it's been a while since I've done anything intraday, mainly because I prefer to make decisions to do things after the fact. Which actually you won't see this till after the market's closed anyway, but just to get a little glimpse of how I look at things and how I view things and what I look at, because we are coming up to the last hour of the market, and that is usually most of the time when I make decisions.
An alert target has been reached.
In fact, there's an alert. I'm going to pause right here and see. There's an alert that just went off. CAR. So little guys, where's it? Right here. So go look at it and see what it's doing. And you can see the upper right corner of the chart. Got a bearish trade candidate, and this thing's going up right now. So market, as you can see, kind of right in the middle of the SPX, there's a real small chart there. You can see upper left-hand corner shows the numbers. In fact, I need to get rid of that spiders. I don't need that anymore. But you can see the Russell's still down 7.5 points right now. The other markets are up a little bit. It's been back and forth all day. So real hard to tell what's going to happen. The last couple of days have been extremely volatile, just back and forth a lot. So it's hard, and in periods like this, it's really, really difficult to just hold on and hold through it and stomach the big swings. So, all right, moving into the big guys, we're going to look at Apple. And obviously that big giant head and shoulders, still looking at playing that out and hopefully being able to take advantage of some of the downside swings on it. So you'll see Apple's up a little bit today. As of right now, that is. It's been down and up, down and up, down and up. Most things have. So They've been kind of swinging around the break-even line. Things gapped this morning down on news that global economic growth is slowing down, which shocker, right? It's hard for me to believe that some people haven't seen that yet, but then again, not everybody's as involved as we are either. So anyway, looking for Apple to break down. ADP, another one looking for this to move back down. We've got an in the neck or an on the neck, whichever one it could be, type of pattern. So looking for this to stall out and break back to the downside. Alexion Pharmaceuticals has been just trashed. You can see it was about 190 here about a month and a half ago. Now it's at 137. Looking for that slide to possibly continue. If it breaks back below 137, you see there is potential for it to drop from there. And those two spots right there that don't look like they hit, they actually did hit. They went to 126. So it's about $9 of potential or so. So we got a decent amount there. So we'll see what happens with Alexion. The only thing that makes me nervous about this is that it's sold off so far that the chances of a bounce, the odds of a retracement are high. So this is one I would take less risk on, especially with the market being fairly oversold as well. I think there's still some downside, but there's also the risk of a bounce to the upside as well. Amgen, another one that is sitting right on, there's some support here. It's not really that significant, but if it can't hold that, the next major level is 132, 131.60. So, and you can see a nice little hammer pattern. So if it fails to hold this level, pretty good chance we're going to go down to about the 132 area. So I like the looks of Amgen. Amazon. Now, this is basically a counter trend play, kind of like Alexion, where Alexion's so oversold, as is Amazon. I mean, it was $700 just a month and a half, 2 months ago, and we're at 485. And that's 215 points. Now, I don't know what percentage is that. I mean, 10% is 720 is 14. I mean, that's a 30% drop? 210 points would be 30%. So, yeah, it's about a 30% drop. Chances of a retracement on this, pretty solid. And that's really what I'm looking for, is just a quick pop to the upside. I typically don't trade these big ones because the options are so crazy. And again, I don't care how much money you have to trade with. I'm not going to pay $40 or $50 for an option. I'll just go find a $40 or $50 stock and buy the stock if I wanted to play that big. Because really there's no... So it moves 30 points. And you put $40 up and you make $20 on it. Okay. Yeah, you made 50%. That's still good money, but it's one of those things where I just don't see the sense in it. I guess if I was working with $10 million, it'd be different. But we're popping 100 contracts at 40,000 is $400,000, no big deal. But not working with $10 million, so. Even $1 million, I mean, it doesn't make it. Even 40 or 50 grand at one pop. I mean, and you're gonna make 20 grand. And granted, yeah, it's there. Percentages are percentages, but that's the thing, and that's why I don't trade these. Is why would I spend 40 or 50 bucks when I can go to an Amgen and spend 8 or 10? And if I do want to put 40 or 50 grand into a trade, then I could buy 40 contracts of this versus 10 contracts of Amazon. If I get a 50% rate of return, I have 4 times as much profit. Hopefully that made sense. Alibaba. Now, it's not marked on here. They're supposed to come out with earnings on the 17th, so it's not marked on Extreme Charts yet. I'm not sure why. But it was originally supposed to come out today, and then it got changed to the 17th, or at least the original estimate was for today. And then the last one I saw was on the 17th, and I thought I saw that it was confirmed. But Alibaba looking for the same thing with Amazon. It's oversold, looking for it to pop to the upside. Just a quick move. Would consider a smaller position, considering that the market still has some downward, it looks like. Bristol is big bullish engulfing pattern from yesterday. And so pretty solid volume, a little bit bigger than average. So looking for this thing to swing to the upside possibly. Still a little skittish on the upside stuff. So I'm not too excited about this, I think is an easy way to put that. Cardinal Health. Again, we've got a hammer type of pattern. We dropped from 84 to 76, which isn't huge, but then again, it was 90 about a month and a half ago. So there is a chance that we'll bounce from here. It's at that support level. It's really basically what I'm looking for here is a quick, 1 or 2 day bounce. You can see last time, just a week ago, it came down here and hit 76. It ran up to 80 in one day. That would be the ultimate goal right here. That's what I would hope for. CMG, Chipotle, another big, $400 stock that, especially when the volatility spikes, and that's another reason that Amazon and Google and all these other ones are more challenging in periods like this. Volatility is so high, they fluff it so full of time premium. Every single one of them, they do the same thing, but it's just so much bigger. And Chipotle is one of those. What we've got is a nice double top, a bounce, a retracement off of a low, going from 750 to 400. They've had their challenges for obvious reasons. I don't know if you're familiar with the news or not, but they've had some E. coli breakouts and some concerns about that. So looking to take advantage of a quick break to the downside. It's 33 points. It's a 7 or 8% move, but then again, you've got the challenge of expensive options. So Costco, big bullish engulfing pattern with pretty solid volume the last couple days. Looking for it to continue to the upside for a few points. There's about 4 points of upside, it looks like. So I'm trying these mints to see if they'll stop this cough. It's helping, but CVS. This one's broken down. And get longer term. There's really not much to hold it here. There's a little tiny bit here. I remember seeing this, but I didn't mark it. I'll put it on there now. A little tiny bit of support right there, but there's really nothing from there all the way down to that $81 level. So I love the looks of this because not only do we accelerate, of course we have earnings, and there's the challenging part is, what was that? That was today? CVS. It was supposed to be. Maybe it was this morning, or maybe it was yesterday, and that's just marked wrong. Yeah, who knows? But especially if we stay down here, or if this thing sells off by the close, there's our trading plan. $7 move on an $80 stock, that's almost 10%. So we got some pretty solid potential there. Chevron, big bullish engulfing pattern with a small increase in volume, 3 million shares, so 20%. But if this thing breaks to the upside, we could have a nice little bolt that takes off. You see what happens sometimes 3 or 4 days, and this thing runs big. So we'll see what Chevron brings. In fact, I kind of want to breeze through these and go look at them on eSignal.
Attention,
DRI.
an alert target has been reached.
In fact, there's an alert going off, so I'm going to hustle through these. DRI, Darden, nice double top type of pattern going on. Broke the midpoint. Yesterday it tried to stay back up there, so we'll see what this thing closes out as today. And see if there's an opportunity.
Attention, an alert target has been reached.
Goldman. Goldman, we're looking for a break to the downside. I'm going to get a longer term picture. See, this thing's been beat up too. But there's not a lot to hold it up. Well, I guess there maybe is some in there, but not a ton. 149 to 134, so some big potential there. It's a $150 stock, so 13 points. It's almost 10%. But a big sell-off yesterday, almost a falling through methods type of pattern. So I love the looks of it. Look at indicators; they're starting to turn bearish again. So, of course, today could change that. We'll see what it looks like here in just a minute. Lockheed Martin has been extraordinarily bullish, and you look at this, it is up. It's 225. It was 75 just 3 years ago. Extremely high. Is it overbought? Certainly looks like it. We've got a head and shoulders pattern there. The only thing is that yesterday it took off and ran to the upside, so we've got to keep an eye on it and see what happens. If it gets back below that resistance and back below the neckline, then we'll look at it more seriously. McDonald's. Another one that is kind of crazy. I guess since 02 this makes sense to go from 10 to 120, but to bolt from 100 to 120, I guess that's 20%, not a huge thing, but it has sold off pretty significantly in the last few days. and looking for that to possibly continue, especially if the market decides to continue. And there's the big tell right there. I knew there was one of these that I was looking at, thinking about. Look at the massive divergence on MACD. You go all the way back to October of this last year, the high in MACD. We've got continued highs on the price and continued lows on MACD. Eventually, generally speaking, the price eventually catches up to MACD. So McDonald's may be a good long-term play though too, but I'll be keeping an eye on the short term. So kind of a falling three methods type of pattern here on PCRX. Not textbook for sure. There's 6 days there. Not all of them are small, but very similar. We've got earnings coming up though in a week or two, a couple weeks to 22nd. But it gives us enough time to possibly take advantage of a downward move if it does break that. So Procter & Gamble, one of the few bullish candidates. Well, there's I think about 5 or 6 actually on here. But this thing has taken off. Personal care, household products. You got a rising 3. This is again not textbook. There's 5 days, but at least they're small days. And you've got big volume on both the days. Pushing the bands. Everything about this looks very bullish. Looks very, very good. So we'll go see what those are doing. PRGO. Last but definitely not least. Another one that's been beat up pretty good, 200 down to 137 in just a few months. And it broke the lows there at 140. So we're looking at 128 for a target. So that is all dependent on what is going on right now. So let's go look and see. We're on the Big Guys tab. Just out of curiosity, looking at Netflix. Amazon. Here's the one, we're looking at a potential bullish trade for, in fact, I'm going to make this a little bit bigger. I'm going to do that. I'm just going to change this and shrink it. The intraday chart's not as important. Nor is the option chain. Let me hit save, actually, make sure that they're all saved. So it was a while ago, but it used to crash on me one time after I'd input all the data, and because it didn't get saved, it was all gone. Very frustrating. So if you're using eSignal, then save it. Make sure, all these big guys right here, I put them all in. I put the lines on there, which are my alerts as well. And I did an entire slew of these one time.
Attention, an alert target has been reached.
And everything was gone. I had to go redo it all. Very frustrating. So there's Bristol, was just hitting alert. We'll come back to that. Amazon, it's debatable. It's very debatable whether to jump on this or not. It did hit this morning, the entry point, and it's tempting. Here's the only thing. It's straight up noon, West Coast time, so we're an hour from the close. The close is at 1 o'clock here, so I'm going to speak time-wise. But we're in the last hour of the market, and generally speaking, the last hour will give us an idea of what's going to happen the next day. And so right now, with things starting to shape up and look a little bit bullish, but then again, the SPX, you can see at the very top, is up 4. It's not a big up day. In fact, we can put the SPX on the chart there. I just changed that the other day. We've got a big downdraft, went sideways, and, there's some, it's basically in a channel today. You can see if we look at the intraday chart, if we were to put a line right up here, to 1858, 1834, it's basically been kind of channeling in there the last couple days. So we'll see what happens in this last hour. Usually about 20 or 30 minutes, 40 minutes before the close, we'll start to make a move one way or the other. So I'm going to look at, I'll be looking at some potential bullish candidates. Let's take a look at BABA. Alibaba is shaping up to give us a bullish engulfing. Let me get back to Amazon and say one thing. The volume, look at the volume on the daily chart. Very, very thin. We're talking 6 million when it's been averaging, well, it's probably been averaging about 8 or 9. But yesterday it was at 10. So the big numbers have been showing up about 10. Let's see, what is the average here? Amazon. It's averaging 7.15. But lately, you notice the last couple weeks, it's been averaging a lot more than that. It just hasn't caught up yet. So we're up in the 8 to 9 range over the last few weeks. And we do have to look at it on a relative basis. So I always look at usually the day before, the last few days. And if you look at 4 days ago, the volume there, we had a little update like we're having now without the upper shadow, and the next day it tanked. You notice the volume on the down days has been bigger. These two big green days are all earnings related. Big anticipation into earnings and then a disappointment with earnings, and it went boom. Or some, I don't remember exactly what happened. I don't know if earnings came out that day. So we'll see what Amazon does. Alibaba, extremely oversold. Looking for it to bounce. Again, another bullish engulfing pattern, kind of. I mean, definitely not.
Attention, an alert target has been reached.
Oh, there's another alert going off. There's lots of alerts hitting right now. It's sitting right there, and there's a possibility this thing takes off to the upside. So actually, I'm going to move that up to the watch. Amazon's not close enough yet. Bristol Myers, yeah, it's taken off. But again, look at the volume. And that could change pretty dramatically here in the last hour. We could get a lot of volume. But then again, this thing's at about 4 million, and it looks like an average is around 8 to 10. So it's only running about half the average volume, even though it's up on the day. Pretty solid. Cardinal Health, same thing. And that's one of the things that makes me nervous about a lot of these. The volume is really light, which doesn't necessarily mean that it's not going to take off and run, but if it's got light volume, it's not necessarily a bullish sign. So a lot of times it's a short covering. It's a small number of people showing up to the party. So it's a decent party, but it's not big enough to have the big celeb show up, if you know what I mean. Cardinal Health, yeah, I'm kind of mixed on that one. Costco is a little bit above the entry point. How far is it? Ouch. Wait, 148.17. That's a buck away from the entry point. Woulda, shoulda, coulda, right? Makes you wish you could have got it first thing this morning. But you notice the intraday chart on the bottom right here. You would have had to get it in the first hour of the market, in the first 15 minutes. Wait, what's the entry point again? 147.16. There it is right there. So yeah, that would have been hard to grab that. This is where I'd look at these on a daily chart and I go, yeah, when I say it, you probably would have gotten it. That's why I say it. So just looking real quick at some of the practice trades I have on. So remember. Really? Oh, Amgen's taken off to the upside. Apple's still not really, still kind of weak. That's what's hard about this, is that new stuff. So Costco, going to wait on Costco. CVX. Interestingly enough, we had a big bullish engulfing pattern yesterday, looking for this, expecting it to continue, but it's down $2.50 with the rest of the market taking off and kind of rallying to the upside. So interesting to see that oil is not participating in the rally. And I can say broad because Chevron's one of the biggest there is. So PG, Procter & Gamble. Definitely going to move that up to the watch list. Go look at some. These are the bearish trades, which may or may not be popping with the market up the way it is. Apple, of course, is going up right now. ADP. Alexion. This is the hard part is, we're an hour out from the close. There may be some people starting to position for tomorrow. Some things are starting to rally and take off. And it could be just some people getting excited going, look, we're going up, we're bullish again, we're bullish again. Hard to say. That's the thing yesterday with the way it rallied into the close and then kind of sat there for a little bit and had that long
Attention,
shadow.
an alert target has been reached.
Was actually expecting to be up this morning. When I fired up the computer this morning, futures were down 200, and I went, wow, okay. A little surprise. So you just never know. That's
Attention,
the interesting thing.
an alert target has been reached.
I don't know which one just hit. Cardinal Health just hit again. NYCB, okay, that's a little guy. Amgen, going the wrong way. Chipotle is going the way we want it to. It's down $4, which seems like a lot, but it's a $400 stock, so it's nothing. CVS, I believe that's an earnings move. Going the opposite way. CMG, we're going to put this on the watch list, even though I probably won't trade it. Keep an eye on it. DRI. This was hard. Some of these are up a bunch. Some of them are doing well, like Goldman. I mean, look at yesterday's candle was down big, and big volume. It gaps down this morning, and we're just basically getting back to the close of yesterday, which isn't on the neck or in the neck type of
Attention,
pattern,
an alert target has been reached.
which is a continuation. And it looks like right now we're getting some short covering. I mean, you look at the SPX. Go look at just make it a 5-minute chart. Well, there's 15 down on the bottom, but we're getting some short covering, looks like. I mean, that's most likely what this is. Those that have been short are coming
Attention, an alert target has been reached.
in, covering their backside. There's lots of alerts hitting though right now. And this is the hard part. It's like, okay, do you get on? Do you buy calls? Is this when you do it? Or do you wait? Is this when you exit bearish positions? Or do you wait? And it's a tough call. It never is easy. Okay, Lockheed's going the wrong way. Mickey D's obviously going the wrong way. We're looking for bearish stuff on here. PCRX and PRGO. It's very difficult to make decisions when the bullets are flying like this. It really is. Because, here's Cardinal Health. And actually, that should go up here. So let's look and say that we wanted to jump on this, which maybe isn't a bad opportunity. Let's look at the ones we moved to the watch list. CMG, probably not going to do anything with that. PG, maybe a decent one. So we're going to move PG. I'm going to move that up to the call. CMG, we're not going to do anything with.
Attention, an alert target has been reached.
See, and this is the hard part. I'm going to move BABA back down. I'm not going to jump on BABA. BABA's been extremely bearish lately. In fact, took advantage of this entry point of 66.85. Excuse me. It was, that's about where the entry point was for a bearish move. And did very well with BABA. Had a lot of fun with it. But it's still pretty bearish. And you can notice the volumes have been getting lighter here the last few days. Let's get back to these, Cardinal Health and PG. These two could play out well. So let's go see PG. Procter & Gamble, we're looking at about $3.50 potential. February's a little too close, so we'll look at March's. March 4, we don't want that. That's a weekly. 11 March, we need the 18th. And then we're looking at calls. So on the left-hand side, we're going to look at the deltas. Going to pull up and find a delta of about 73. Okay, there's 73 delta. 390 by 410 is a 20-cent spread. That's the 80s. Okay, $2.50. Okay, that would work. So I'm going to drag that and drop it right there under PG. That way I know this is the option I want. Everything meets. We got tons of open interest. Delta's a little tiny bit higher than I like, but 73 works. So that's the one I want to keep an eye on. Cardinal Health, I'm going to probably wait till the last half hour of the market to really decide on this. Because you can see the SPX, watch this. Let me get back to a 5-minute chart. It was just up 15 or 16 points. We were up at 68, and now we're at 63. So it's just dropped 5-6 points in the last couple of minutes. That's how volatile it is, which isn't abnormal. I mean, 5 points isn't that big of a deal, but it's dropping. It does 5 points in literally seconds now. Volatility is just through the roof, and it is definitely more difficult to trade when it's really, really volatile like this because you have to stomach these types of moves, and it is hard because you don't know when it's actually going to take off and go. You can see how oversold off we are, even though realistically we had that little hammer pattern back here, 20th of January. We bounced from there, and then we've started to sell off. We get a little bit of a similar pattern yesterday, which makes you wonder, okay, are all the people going to come flooding back into the market like it's going to go somewhere? And do we need to get bullish for the short term? Well, there's really nothing there to say yes. We broke the lows. We closed below the lows. Granted, it was by 6 or 8 points, but we still closed down there. And with the swings, the intraday swings we've had lately, it's very difficult to make decisions intraday and feel comfortable with it. Let's put it that way. So, but getting back, let's go look at Cardinal Health again and see what we're looking at with here. Marches, again, we're just playing these on a short-term basis. So February's too short because we're only, next Friday, I think it is, right? It's expiration. Yeah, next Friday. So Marches, we've got about 4 or 5 weeks, 6 weeks maybe. So if we're looking at calls on Cardinal Health, go down the Delta column. 62 is too low. 75 is a little higher than I like, but I'll take it. 65 to 70 is the sweet spot that I like. 560 by 6, it's a 40-cent spread. I don't like that, but lots of open interest. That's good. So I'll drop it into here. Now I've made a decision as to which option I'm going to buy if I choose to pull the trigger on these things, either one of these. So now the decisions are made. Now all I have to do, I mean, as far as what's what, I don't have to think of that. I don't have to do anything else except make a decision. Do I want to take the risk or not? If I want to take the risk, how much risk am I going to take? Well, you got $6 on this one. You know, depending on what you're working with, you might do one contract, you might do 10. It just depends. So realistically, with the conditions of the market, I'll take probably a little bit smaller position with these than normal. Probably half, maybe 3/4 of a position, just because of the fact that the market is a little crazier than normal. So I can stomach the moves a little bit more, plus the fact that, yeah, things look bullish at this moment, but with the way things have been swinging and changing, that could change at any time very easily. So here's another pharma. Let's go see how these are. See Amgen and it's just really difficult to tell what's going to happen because literally in 20 minutes, these things could be completely different. I mean, you see the opening here of Amgen. I mean, look at just at this specific one. You know, we gapped down this morning from 143 to 141. We gapped down. We were down $2 right away, and within 30 minutes, we were up. 143. Well, we hit 145. So we were down $3 and we went up $2. So $5 swing in 30 minutes, 45 minutes, and then 45 minutes later, we're back down to buck and a half. And you can see we've just gone sideways the rest of the day. So what's going to happen in the next 45 minutes? It's anybody's guess. You know, it is. This is where it's just kind of totally nuts. And this is where, let's just say it, this is where we separate the boys from the men. This is where the skill of controlling your emotions comes in. Because these are the times that we're dealing with right now where most people crack. And I'm glad this came up. And it's as much as there's times I kick myself and I feel bad for not being the best time manager in the world. But I guess right here, and maybe I'm off my rocker, but I think it's pretty valuable because this is the time that will show you where you're at. Because if you're sitting in your in trades right now and you're watching this market, as I am, because yes, I do paper trade, but I paper trade. I trade as if it's paper. I trade everything I do, whether it's paper or real. I treat it as if it's real. So Amgen, if I had a funded trade on Amgen or Apple, you look at Apple and you go, okay, you're freaking out if you had puts on it, and you see this last 2 hours, it's run from 94.5 to 95.70. Then you see this last candle, like, okay, good, whew. And then you start to like, okay, good, it's going the right way. It's going, go back down, go back down, go back down. And you're sitting there cheering for it to go down. And I'm sitting here looking at it going, I hope it goes back down. I want it to go back down. Because if I have paper puts on it, then I want it to go down. Same thing with Amgen. But it's times like these, like we're having in the last few days, where the volatility is through the roof and it's swinging 50, 60 points a day. I mean, the SPX. It's having these massive volatile swings intraday where 1 hour can mean 30 points. If you can handle that and manage your emotions through these types of times, then you've arrived. If you can sit back and just let things play out and say, okay, I'm just going to let them go. Excuse me. More cough drops. And it's not necessarily letting them go. It is not panicking out. Because a lot of people, I guarantee you, this is where those that don't have control of their emotions are panicking out of trades right now. If they're in bearish trades, they're panicking out and freaking out and they're going exit, 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 get out. Or those that maybe have been looking at bullish trades and want to get in bullish trades, they've been waiting for a bullish opportunity. Right now they're freaking out. They're going, get in, get in, get in, get in. They're jumping on the train. And if you're feeling that emotion, odds are that it's wrong. Odds are that if you're feeling that anxiousness, that nervousness of wanting to jump on it because you feel like you're going to miss it, that's usually the wrong time to pull the trigger. Dang, automated calls. And so pay close attention to how this market the last few days has been affecting you. Pay close attention to how you're feeling and how you're handling and managing your emotions in the battle. And if you're doing okay and you're relatively calm, because I can tell you, in times like this, it's not calm. It's just not. That's why I said relative calm. Because if you can keep if you can stay relatively relaxed, then you're doing good. That makes sense. I don't know, I'm probably beating that, but I think it's an important point. Because these are the times that make or break the best of the trade. And you can see staring at the market right now as it's moving, it's down, it just dropped off. It's 8. It's only up 8 right now. It was up 15 just 10 minutes ago? I mean, the gain has been cut in half almost. And this is why, look at these, PG and Cardinal Health. Do you jump on it now or not? Netflix is up $4, but we look at the SPX and we look at the intraday chart, you can see what's happening. I mean, granted, it's gained some momentum, but now it's pulling back. And if the next half hour, 45 minutes, it drops off to 1840, we didn't close at the low of the day, but we're still below that 1850. Well, 1867 is the number, right? I'm going to go double check that. I think it is. On the SPX, 1867. I don't want to get too picky as far as the exact number because there's 1860 as well. But if we can't stay above that 1860 area, I mean, if we get down to the 1840, $18.45 area, then we're significantly below 1860. So there we have it. Let's see if any of these other ones have gotten close. Amazon, no. See, and there's the thing. You pull the trigger on a bullish trade on Amazon, it gaps down 20 points tomorrow. You're hurting. So just one more peek real quick for fun. Yeah, see, this one's tempting actually because of the big the rising through methods. We got a gap down this morning, but then in continuation to the upside. I like that better than I like Cardinal Health because you're trading with the trend, trading in the direction of the trend. It is, well, it's 30 cents above the entry point. We got about $3 of potential, so that's close enough for me where I would fudge it. See, now, I mean, we're only up 6 now. And just in the last 15, 20 minutes that I've been talking, well, let's see, the timer's at 42 minutes. So if we look at this, 15-minute chart, okay, so 1, 2, 3, so 3 candles. So we were just, as I was starting, we were just having this big candle right here. Make this even bigger. So we were what? We were basically at the highs of the day, 1856. We've run up to 1868, so we were up 15. And now we're only up 7. So, and you can see it's not even that big of a candle to the downside. It's kind of crazy. So crazy days, volatile days, and challenging trading. So welcome to the market. If you're new, if you're not new, you know what this is all about, and it's just a matter of getting a grip on everything, right? So there we have it for the big guys, and we'll be back with you later tonight with the little guys and get that all taken care of. So y'all have a wonderful day. We'll see you soon. Bye-bye.